welcome to Michigan Living. All right, today we're going to be talking about housing prices and especially about what kind of pain we're going to be in. All right, so let's get to this article. The rapid climb in mortgage rates finally paused this week, but elevated borrowing costs continue to stifle price-rattled home buyers. What's going on? It's real simple. Interest rates have risen, and now people can't afford, to buy a bunch of homes. Last thing I heard is that it's about 18 million people in the U.S. no longer can be able to get loans and buy a house in the U.S. That's 18 million people. That's a lot. And even then, as visitors, we're still way below our average, what we should be. So it's going to be getting higher. That's why I always tell my clients and stuff, it's like right now is the time to sell and be able to get your new place. If you're going to be getting a mortgage, now is still a lot cheaper than what it's going to be. The interest rates aren't going to go down. All right? It's not going to happen, not for a very long time. And probably never going to go down to what we were at. So, you got to consider that, okay? But, there's a whole big issue that's going on. But here, let's get to this. Rates of the popular 30-year fixed home loan slid to 5.7% this week, or last week, down from 5.81 the week prior, according to Freddie Mac. Still, rates have climbed 72 base points within the 3-week period, and are nearly 2.5 percentage points higher than the start of the year. Right. And they're only going to get higher. The Fed has already stated that they're going to be doing at least 2 more rate increases, which will probably be at least 0.5 point to 0.75 point each and every single time. And that's by the end of the year. It's just what it's going to be. So if you're going to want to be able to get something, contact me. Let's get this thing going. We need to. It's serious. Before you just can't even afford to be able to buy a house. Or it just gets so expensive to do. And even then, there are different things you can be able to do. So says a lot of my my lenders and stuff like that. There's things you can do. You just need to be able to get the right lender and the right realtor to work with you. That's what you need to do. All right. So, hello. All right. So, according to Aaron Stykes, of a chief economist for Nest Seekers International, home buyers won't see a reprieve in housing costs anytime soon. House prices aren't going down anytime soon, as the Fed is expecting to continue hiking interest rates to combat inflation. Yes, yeah, obviously, and so that's going to be true. But there are too many people that are trying to be able to state that there's going to be a housing bubble in there, so everything's going to sink. No, it's not going to. The only time that's going to happen is if everybody literally all of a sudden has to sell their homes, and then everybody in Savannah is just flooding the market with all these homes, and there aren't any buyers. As soon as it switches to all of a sudden becomes a buyer's market, and there's all these homes available and they're sitting for, like it used to be, from 3 months to 6 months before actually being able to sell, that's when things will, there'd be definitely dips in pricing. But, no, not for a while. Remember, it took 4 years for housing prices, even in the last bubble, it took 4 years for it to crash. 4 years. Not overnight. It took 4 years. All right. So remember, everything in real estate is always slow. Okay. It doesn't happen too much. All right. This interest rate is shocking everything because they're doing it so quick. And the only reason why they're doing it is because of the inflation. They're trying to be able to counter the inflation. Of course, I'm not even going to get into it. But yeah, there are a few things that can happen of it to make this inflationness of that much better off. When they're not doing it, they're just increasing the rates, and they're doing it that way. So it's all up to the feds and what they're going to be doing. It's a federal government thing. Okay. All right. So I think that we're in for a little bit more pain, and I do expect that to last throughout the end of the year, at least. No kidding. It's definitely going to last throughout next year. But of course, it also depends when half of everybody is up for election in November. Then in January, we get all new, hopefully, Congress. So hopefully we can be able to, they can be able to do something. And so hopefully, next year and whatever, be positive. Be positive. All right. So higher rates affect mortgage demand. Higher mortgage rates have doused the once blistering housing market with cold water. To a degree, yeah. The volume of mortgage applications increased 0.7% from 1 week earlier, according to the MBA survey for the week ending June 24th. Despite the slight dip in rates, purchase activity remains flat from a week ago. No kidding. You have less buyers. You still, and we also have less people putting up their homes for sale. It's just what it is. All right. Refinance activity is also plunged, according to the MBA. Applications for refinancing are 80% lower. Well, no kidding. From what I gather, I'm not, that's not my thing. I'm a realtor. Okay. Is that there were everybody who could, for the most part, anybody who could refinanced, and now have this huge lower rate. The stragglers are stragglers. Applications for refinancing have dropped 80%. I would be expecting that to be higher, but they're saying only 80%. Okay. The demand for new mortgages and also refinances have been slowing because we had so much economic uncertainty. Because of that slowing, lenders give a little bit of a bone and drop the average rate of about 0.2% last week. That was a short-lived moment. We're now back to about 6% for the 30-year fixed across the board. So it's really similar to a bear market rally. Personal opinion. Personal activity has weakened in recent weeks as rising borrowing costs have soared home buyer sentiment and diminished affordability. According to Realtor.com, the median listing price hit a record $450,000 in June. All right. Remember, they keep on going up. All right. Even in this, still going up. Still going up. All right. And up 16.9% compared to last year and 31.4% compared to June. All right. So remember, it's going up, but it's all it's going to do is just, it's not going to go up nearly as much. Because remembrance of that, we have had unbelievable increases on home pricing for a while. All right, a lot of times where home price where could rise up 20% in a year. You just can't, if you had $100,000 house, you could be able to sell for 120 in a year. Boom, you're good. I see most buyers sitting on their hands right now, and that's a problem because they're getting shell-shocked. They're hoping that the rates are going to go back down so they can afford it again. They're not going to. And that's going to be a problem. That's why you need to figure out and get a plan and a strategy to then be able to see what you're going to be doing and what you need to do. Okay? And that's because we don't know where things are going. Right. Most people and stuff have no idea. I mean, my crystal ball broke, so I can't see everything in the future either. But there are certain things that everyone knows how things go. All right. And all you got to do is just look at the signs, see what's going on, put it all together, and then you can be able to see the trend on what's happening. All right. It will take several months before home buyers see home prices settle. Sykes explained, where home prices and rates end up will depend on a multitude of factors, including how the financial markets digest the Federal Reserve's upcoming interest rate hikes. Sure. That said, Sykes advised those looking to buy now to act quickly. Okay, I very much agree with. You better act now. If you do need a mortgage, get a rate locked in now. Just like my friends and stuff that are lenders and stuff that are actually good lenders, because not all lenders are good lenders, or even the agents. So make sure that you get a good one, right? I don't know. The ones that are most really good realtors are the ones that they will usually recommend. We only recommend the lenders we know aren't going to screw over our clients. All right? Because there's the one thing, it's like even in the last couple of weeks and so that I've had so many lenders all of a sudden coming and calling me and be able to go, hey, yeah, we want to be able to come on over and have lunch with you in order to see about doing business. I've had a couple lunches and stuff a week just for them coming around to some of it and sniffing around and be able to look for business, because that's just what it is. But just like I've tried to explain to them is like I am a person. I don't. What can you do for my client, right? That's the part that matters. I don't care about me. You're not going to do anything for me. You're going to do it for the client, and that's what matters. All right. What benefits do you have for my client compared to anybody else, right? Most of the time and so that, especially with the programs or whatever, they're very adaptive. So when one gets something going and so that, then all the other ones will follow. All right, it's because nobody wants to be left out. So pretty much they all have the same programs as far as I understand. There are certain unique things from one lender to the next and stuff like that. But the only part that really matters, and the only part that should matter to you, all right, is, because this happens way too often, is that it's depending upon the lender. All right, all of a sudden we find this beautiful house, we set up a price, we're good to go, and we set up our closing. We're going to close, or you're going to get your house, and then all of a sudden the lender calls you and goes, oh yeah, we're not going to be able to close, and we're not going to give you that loan. There's nothing worse, literally. There's nothing worse. And a bunch of times, because there's always one thing that you never do. You never start, open up a credit card. You don't get a loan. You don't do anything during the entire home buying process. You do nothing with credit or anything. All you do is save money. That's all you're doing. And even for no reason. They just, whatever happens, and then all of a sudden, sorry, we're not going to be able to give you your loan. That is the worst. So that's why some of it, just like with me, whenever I talk to lenders, I get to go, okay, if you actually say that my client, barring anything stupid they do, if you say that you're going to be able to give them a loan, what's the guarantee that you're actually going to be able to give them a loan? All right. And the ones that I use or recommend are the guys and stuff that, or in women, that would go, oh yeah, if we're going to be saying we're going to be able to give you a loan, or the client a loan, we're going to be able to give the client a loan, barring they do something stupid. And you go, oh yeah, 100%. That's a different story. Because there are some lenders out there that will just come up with something, and then all of a sudden they just don't want to lend them the money, and then all of a sudden you're SOL. And that is a fact of life. Nobody wants to talk about it. Nobody wants to talk about that, but it is real. And it's happened a few times. Or what's even or what can also happen has happened. Um, you're you're going to life experience. The day before closing, me and my clients, we were going and doing our final walkthrough. During our walkthrough, and my clients so would probably be watching this. Well, probably. Yeah, it's you. You know who it is. Um, got a phone call all of a sudden from a title company going, "Hey, yeah, oh no, yeah, it was we were doing a walkthrough a couple of hours before closing." All right, because of how it was set up and stuff like that, we couldn't do our final walkthrough until literally the day of closing. All right, so we went there. We were doing a walkthrough. Everything was fine. Everything was, whatever, blah blah blah. Do you care about this? Blah blah blah. Nope, we're good. Let's get this thing over with. Absolutely great. Got a phone call. Title company calls and says, "Hey, we're not gonna be able to do a closing today." It's like, what do you mean you're not gonna be able to do a closing today? Because title companies also matter too. That's why I only work with certain title companies. But it wasn't the title company's fault. The lender didn't send them the final documents that they needed in order to be able to figure all the final payments and all this sort of stuff out that they need to be able to fill out in order to be able to get it going. They just didn't have the information. If they don't have the information, they can't close. So, of course, clients are very upset. As soon as he was like, "I'll give you a call back." Well, luckily enough, so not to be able to, whatever for client privilege, but they were able to contact their lender in order to be able to go, okay, what's going on? And they were able to straighten it out. And luckily enough, they were able to then be able to get them to send them the title company the paperwork that they needed for all the final numbers. And the title company kicked butt on getting it done. Because they only had, by that time, less than 2 hours before we're supposed to be closing. And so she kicked butt. She got everything going. Everything was good. We came in, we closed, and it was a good, happy ending. But it was really scary, very scary. Up until then. So just crazy stuff can happen. All right. That is why it's so important to be able to make sure that you have good people. Okay. Not just your realtor, not just your lender, but also a title company, because they all have to work together. All right. And that's just on a standard or an FHA. If you have a VA loan, again, and some of that's a little bit pickier, but again, I'm not a lender. All right. So, I can only talk about personal experiences, but so far I've never had any, bad anything's happen. So that's good. But so this chart right here, and so that is going to show you right here, 30-year fixed rate mortgages since 1972. All right. They're the highest. This is huge. All right. The highest in 1981 was 16.63% interest rate. All right. And that is key. All right. 16.63% is what you had to pay if you were going to be getting a loan. Period. Well, now we are in 2020, right? 2021, 2022, really isn't out officially yet, because they're still having little numbers, whatever. But so far, all right, this is showing you what it was. On an average, we generally have right around 8% interest rate. All right. It's going down. Remember, everything does this. Right? So we're still under 8%. And from what I was hearing, The Fed and some of that wants to be able to get right around 8%. Now, that was talk, and I'm not exactly sure what's really going to happen. That's not my forte, but as I listen to people who are into all of that, and that's what they're talking about, is they want about an 8% interest rate. Well, we're still low, right? We're definitely below 8%. So anything that you're going to be able to get now is going to be huge. And even then, some of there are little tricks and different things you can be able to do to lower your interest rates. You can buy it out. There's a few other things. But you talk to a good lender, okay, and then they will explain to you what your options are. All right? You can get terms, etc. All right? But only while you actually have all that extra cash available in your equity. Because you can use that equity to be able to do a bunch of things, okay? So, like I said, and it depends on your state and, country and everything else, all right? I can only be able to speak for what I do here in Michigan. Seek a professional lender and stuff like that in your own personal, in your state, ones that you can be able to trust, and then find out what your options are. All right, now, how's the market come back to center? This is what we're going to be talking about here. The historic shortage in housing has priced out many first-time home buyers out of the market. Not necessarily. That I disagree with. The historic shortage in housing has priced out many first-time home buyers. Not necessarily. It increased the value of the properties because everybody wanted them. But because you had low interest rates, people could still get them. It's only now that they're increasing that those people, now they're priced out. Because now that it's getting near 6%, those people can't get loans now. They can't afford the properties now, or some of them just can't even get a loan, right? But like I said before, there's I think I'm going to try and be able to reach out to some of my friends in order to see if any of them will be willing to get online and talk about it. The lack of affordable entry-level homes for sales has left them with no other choice than to rent. That's going to be scary. Because if you think trying to be able to buy a home is bad, trying to be able to rent a home is hard, and even if you get in, we're already talking about that. They're going to be going on over, and your payments are just going to keep going up. Whereas if you just buy a house, just trudge in, be able to know that you can be able to get a house, get that mortgage, you know what your monthly payments are going to be. You don't have to worry about them going up 10% every year, if not higher. Okay? However, buyers are increasingly running into another problem: sky-high rent. Yeah. It's much cheaper to just simply buy a house than it is to rent it. That is still pretty much a fact right now, even with the interest rates increasing. I'm going to do a video on that. I'm going to show you how much it's going to be and why. Yeah, I'm going to do that. According to Redfin, the median rental price hit a new record high of $2,000. That's a HUD number. $2,002 in May. So median rental price is $2,000. Wow. We have people stuck in the cycle of perpetual renting, and landlords can really take advantage of that. Yeah, they can. And they will continue to increase average rents based on that incredible demand because people cannot afford that first 20% down payment. You don't necessarily need a 20% down payment. Like I said, get a good lender. Find out what your options are. All right? That's key. They can't afford the higher interest rates, so it's a catch-22. Yeah, it is. 100%. All right? Because like I was talking about. So I'm glad this person, somebody actually has a clue. While housing inventory remains near record lows, it's bad. It's slowly rebounding. True. Because all of a sudden a bunch of the buyers are no longer in the market. It's a catch-22. That is a catch-22. A good sign for hopeful buyers. Yes. Because remember, it's about perspective. All right. With 18 million people no longer able to buy homes, it means that those who can still afford a home and get a mortgage, you're much better likely to not have to go up against 40 people trying to buy the same home. Right? The number of people who are going to be able to want to buy that house is now dropped. So you have a much better opportunity for being able to actually buy that house. All right, that's key. There's some really fantastic things and so that are sort of out there and stuff like that. It's huge. But let's get down back to the article. All right. The buyers have felt little relief so far. Chief economist for Realtor.com. The gain in June's inventory may open up opportunities for hesitant homeowners to trade up. Exactly. There's some seriously great things that are going on. This is going to be an unbelievable time, especially if you already have a house and we need to be able to sell it so we can be able to get you a new one. We can be able to upgrade or even parallel. Because I have a few of that that want to parallel over, right? And some even want to be able to, what they're looking for. They have this really big house, but they've been there for 20 some odd years. So they don't have any more kids and wherever. Empty nester syndrome, basically. And so, of course, they want to be able to buy, and of course, they're getting older. It's key. They're getting older. Nobody likes stairs when you get older, let me tell you. All right. So a lot of times I'm looking for ranches. All right. It's just funny because, personal things. But because, my clients are great. All right. You're trying to be able to get the best for your lifestyle, and that's key. Now, it's great because we're in such an extreme seller's market. Now we're really coming back to center. It's amazing to think you could have a balanced market. That's what we're approaching, and I really hope it doesn't go to the other extreme. It won't. I mean, it's not in the Fed's best interest to raise the interest rates above 8%. It's not in their best interest to do that. The only way they're going to be increasing that hypothetically, because I'm not an economist, would be if they are not able to curb inflation. All right, because that's what they're doing it for. They're increasing the interest rate in order to be able to try and curb the inflation. Okay, so that's what's going on with that. If you like what you see and hear, if I've given you some good advice and some good knowledge, please do a like and share the video and give me some comments. All right, I look forward to talking to you again. Thank you. Bye-bye.